Hello, property navigators. If you're considering investing in Ipswich from 2026 onward, this video will give you everything you need to know. We've spent hours on research to provide you the facts that underpin the data. There's nothing on YouTube like it, which means this video analysis is a whopper. So we've created chapters and sub-chapters for you to be able to skip through or come back to those bits you want to watch again later. Let's go. Ipswich has become one of Queensland's hottest property markets, and it's one of the state's fastest growing. It's an historic city in southeast Queensland, about 40 kilometres west of Brisbane CBD, and one of 5 local government areas that make up Greater Brisbane. But don't be fooled, it has its own sprawling footprint of around 1,100 square kilometres with about 80 suburbs. Importantly, the city sits at a junction of 5 major highways, making it a logistics powerhouse with excellent transport links. Commuter rail lines connect it directly to Brisbane, and its proximity to both Brisbane and the Gold Coast means easy access to air and sea ports. Ipswich's growth is very strategic, as outlined in the Southeast Queensland Regional Plan, solidifying its role as Greater Brisbane's Western Corridor. Notably, the city ranges from long-term established areas to more recent massive growth hubs such as Greater Springfield in the east, which is Australia's largest master plan community, spanning almost 3,000 hectares and is projected to reach a final population of almost 150,000 residents upon completion. Similarly, the Ripley Valley in its south is being developed to eventually house around 130,000 people when completed. These expansion areas alongside Ipswich's established suburbs illustrate how the city, which was once known as an affordable sleepy town, is rapidly evolving and growing into a key metropolitan hub in its own right. And this is exactly the reason why you must be very informed before investing, because as I'll explain, its landscape has recently changed. Here we'll cover historical data and market trends such as population and property price growth, the rental market and listings volumes to understand where this market has actually grown from, because it's pretty astonishing. Population growth. Ipswich is one of Australia's fastest growing areas. In 2016, the city had about 200,000 people. By 2021 census, it had 230,000, and council data as of early 2026 estimates 270,000 plus residents. To break that down, more than 9,000 people moved to Ipswich over the 2024-2025 financial year. The last 3 months of 2025 alone saw more than 2,300 new residents. That exponential growth isn't slowing down in the future, which we'll dive deep into shortly. Property prices. Ipswich has moved from an ultra-low price market to a mid-price market in just a few years. In 2020, the typical house price was around $432,000. In 2023, it was $678,000. Now, fast forward to the latest data as of early 2026, and the typical price is about $970,000, a 109% increase in 5 years. But it's worth noting that the typical price has been pulled up partly by the many new, larger homes built in estates like Springfield and Ripley, which sell at premium prices for the area, while established suburbs absolutely still have less expensive properties available. Now, even units and townhouses, traditionally a small part of the Ipswich market, have seen double-digit annual growth, around 196% over the past 5 years, with typical unit prices now around the high $580K mark. The days of snagging a house in Ipswich for $400K are gone. Even so, Ipswich remains markedly more affordable than Brisbane or the Gold Coast, which is why demand continues to be strong. Rental market. In early 2020, the vacancy rate was between 2 and 3%, which is considered a relatively balanced market. But by 2022, the population growth surged. Vacancy plunged well below 1%, even hitting 0.6%, indicating almost every single rental getting snapped up immediately. From 2023 onward, the vacancy rate hovered between 0.8 and 1.5%, which is critically low. The most recent data we have as of early 2026 shows vacancy at 1.1% after being below the 1% mark for most of 2025, which is still absolutely critical. These ultra-tight conditions have pushed rents much higher. Check this. Median house rents in 2022 were $353 and jumped to $455 in 2024. The latest data as of early 2026 shows that median rents are $542. That's a 63.25% jump in the past 5 years, averaging 12.6% per year. Until a lot more homes are built to keep up with the population growth, which we'll cover shortly, the vacancy rate will likely remain very low. For now, Ipswich landlords are firmly in the driver's seat. Listings and supply. The number of properties listed for sale from 2022 onward also plummeted, which contributed to the upward pressure on rental and sales prices. 2022 saw the lowest levels of listings available in the past 10 years. Supply literally fell off a cliff. Since then, the number of new listings hovered a tad over half of what was available in the previous decade. Until now, that is. Early 2026 has seen listing volumes crash to the lowest point they've been in pretty much forever, or at least the past 16 years, which is as far back as this data set goes. Until we see a significant rise in homes listed for sale, buyers will continue to face competition and it will continue to be a seller's market. Where is Ipswich's market heading? Here we are going to cover the city's future population forecast and give you the inside scoop on the newly released 2025 Ipswich City Plan, bringing together housing targets, future supply, updated zoning, density, and dwelling type targets so you understand where you should be looking for property right now. Population forecast. All projections show Ipswich's population expanding massively. Official forecasts by both the Queensland Government and the Ipswich City Council suggest the city will double in size within the next 20 years. That means the City Council is planning for 530,000+ people by 2046. Even in the nearer term, the numbers are striking. At the current growth rate of 8,000 to 10,000 new residents each year, Ipswich should cross 300,000 people before 2030 and potentially hit 400,000 in the late 2030s. Such explosive growth will make Ipswich one of Australia's largest urban areas, comparable to present-day Canberra or Greater Newcastle. For property investors, this simply means sustained housing demand for the foreseeable future, as tens of thousands of new residents will need a place to live year after year. Accommodating this population boom is both the city's biggest challenge and its biggest opportunity. On paper, Ipswich has an advantage that many cities don't. Lots of land. But land alone doesn't solve the problem. Now, this is where things get really interesting and where investors can get caught out when treating Ipswich like one big market instead of individual markets within the city. Council has very recently redrawn the rulebook by releasing a brand new planning framework that fundamentally reshapes how the city will grow over the next 2 decades. The new Ipswich City Plan, which took effect from 1st of July 2025, has at the centre of it one very bold target: 100,000 new homes over the next 20 years. This is an increase of over 10,000 homes from the figure outlined in the state government's South East Queensland regional plan. Ipswich Council's own modelling shows this would lift the city's total housing stock from roughly 92,700 homes to about 192,400 homes across the life of the plan through to 2046. That's well over doubling the city's housing stock to support population growth. When you break that down, Ipswich needs to deliver around 5,000 new homes every year, or over 90 new home completions per week. And this is where the challenge becomes very real. In recent years, it has typically delivered closer to 2,000 to 3,000 dwellings annually, meaning the city now needs to almost double construction output just to keep up with the pace of demand. But here's the critical part. That supply won't land evenly across Ipswich. The plan is deliberately designed to channel growth, and that means some suburbs will absorb significantly more density and new dwelling supply than others. In plain English, Ipswich is solving a problem that every fast-growing city eventually hits. You can't house over 500,000 people with just detached houses on big blocks. The City Council has been very open that the type of housing it has historically built no longer matches their future population profile. Ipswich has traditionally been dominated by low-density detached houses, which, simply put, means houses on large blocks with big backyards. In fact, as per the Southeast Queensland Regional Plan, currently 88% of all residential dwellings are houses. But big changes are coming, and by 2046, that figure will reduce down to 70%. The Council's Housing Action Plan recognises there is a clear undersupply of medium and higher density housing, which includes townhouses, apartments and units. So as the city grows, there must be more of this higher density housing built. As an investor, it very much matters where and what you buy at a micro level right now. It means being very specific which suburbs and asset class you purchase. Make sure you note this, because the new 2025 City Plan is essentially a reset. It overhauls zoning, density controls and development rules to force a shift in what type of housing supply is built and where. Let me explain. Firstly, the city is deliberately pushing higher density housing into the right locations. Areas around train station, major bus corridors and activity centres are being upzoned to allow low, medium and high rises and even mixed-use developments. The goal is to create walkable, transit-oriented urban villages, places where people can live closer to transport, jobs, shops and services rather than pushing endless sprawl further outward. In practice, Ipswich is reducing 18% of houses with high density options, increasing low-rise developments from 12% to 16%, introducing medium density housing from 0% to 8%, and adding high-rise dwellings for the first time, which will account for about 6% of total stock. So some very big implications here that need to be taken into consideration. If you are investing for development potential later, then exactly where you buy right now matters. So make sure you check not just the new zoning, but also the block-specific attributes required by council for development under the new plan, so you are in a solid position when the time comes. Secondly, the plan makes it significantly easier for property owners to add secondary dwellings to existing properties, such as granny flats and dual occupancies, with fewer planning barriers. This is one of the fastest ways to increase rental supply, support multi-generational living, and gently densify existing suburbs without large-scale redevelopment. On top of that, Queensland-wide law changes now make it easier to rent out secondary dwellings to anyone, not just family members, which has encouraged granny flat supply in the region. Thirdly, new master planned estates are being required to deliver a much broader housing mix. Instead of wall-to-wall, four-bedroom project homes, developers are increasingly expected to include smaller lots such as townhouses, duplexes and boutique apartment blocks. But be careful buying around these areas, and I'll explain why in just a minute. Finally, the new city plan is paired with changes behind the scenes. Ipswich Council is streamlining approvals, identifying priority growth fronts where red tape can be reduced, and working to front-load infrastructure, meaning schools, roads and utilities are planned alongside housing, not years after residents move in. And this is why we've left specific infrastructure projects and their costs out of this video, because rest assured there's a shit ton being spent and built to support this growth. Suburb selection risk in Ipswich is now directly tied to where supply will be delivered. The biggest change to investment property performance isn't just Ipswich versus Brisbane, as it has been in the past. It's now suburbs where new supply is going to be abundant, frequent and scalable versus suburbs where supply is constrained, either by zoning, character, topography, overlays or infrastructure capacity. If you buy in a pocket where the construction pipeline is huge, where developers can keep delivering similar product year after year, you're operating in a market where supply can put a cap on growth. That is because price growth tends to be more sensitive to new estate releases, incentives, build activity, and new shiny stock competing with your resale. On the flip side, if you buy in a location where demand is strong but the ability to add new supply is limited, think flood-safe established houses on large blocks with good access to transport and amenity, well, those markets will often hold stronger pricing power over time because buyers and renters are competing for a relatively fixed pool of homes. All of this has major implications for property investment outcomes, and it all matters right now, not in 10 or 20 years. So if you're considering buying in Ipswich, you have to ask a different set of questions nowadays. Where is council encouraging density? Where are the activity centres and transport corridors? Where can supply come on quickly and where can't it? Because the next decade of performance will be heavily shaped by the interaction between planning settings, housing pipeline and infrastructure delivery, not just citywide median price. As part of the new 2025 Ipswich City Plan, the council has barred many of the areas prone to flooding from future development. That said though, due diligence is still needed. Flood risk is critical, particularly around the Bremer River and creek catchments. So flood overlays, historical flood data and insurance costs must be checked before you even consider property. Soil conditions matter too. Many parts of Ipswich sit on reactive black soil, which can lead to foundation movement, cracking and higher long-term maintenance. Through the medium term, Ipswich will shift from growth potential to growth delivery. Infrastructure already in motion, roads, hospitals, schools and the planned Springfield to Ripley public transport corridor will materially change how the city functions day to day. As population pushes over 300,000 people, Ipswich will feel more urban and housing supply will finally start to respond. But this won't lift all properties equally. Suburbs aligned with transport, amenity and constrained supply should continue to outperform, while locations absorbing large volumes of repeatable new stock may see growth moderate as buyer choice increases. Long-term outlook. Beyond the next decade, Ipswich will evolve into a full-scale city of 400 and then eventually 500,000 plus people. Growth areas like Ripley will have matured into complete urban centres and Ipswich's identity totally shifted away from being Brisbane's affordable alternative into a city with its own economic gravity. By then, property performance will be determined less by citywide growth and more by planning outcomes, such as which suburbs captured infrastructure, jobs and amenity, and which were diluted by oversupply. If infrastructure delivery and local employment keep pace, Ipswich's long-term fundamentals remain very strong. But the winners will be those who bought in the right locations early, not those who simply bought anywhere. Why Ipswich is an opportunity if you get it right. Despite the recent price rises, Ipswich remains materially more affordable than Brisbane, with established house prices still well below Brisbane's medium. That affordability gap matters because it leaves genuine room for further growth as Ipswich matures. With population projections pushing well beyond 500,000 residents over the next 20 years, housing demand won't just be strong, it will be sustained. Tens of thousands of new residents will need homes every year, and that demand underpins Ipswich's long-term growth story. Pair that population pressure with improving infrastructure, expanding amenities and solid rental yields, and Ipswich remains very much in a catch-up phase value-wise. Lower entry prices today with strong growth potential ahead, but only if you buy well. And this is where nuance matters. Ipswich is sitting right at an inflection point. The new 2025 City Plan is ambitious, but execution will be everything. If housing delivery falls short, whether due to infrastructure delays, construction constraints, or feasibility issues, supply pressure will remain. That keeps upward pressure on prices and rents, particularly in established, well-located suburbs where supply is harder to add. That is why Ipswich is not one uniform market, and don't treat it that way. Some areas will absorb new supply relatively easily. Others, especially flood-free, transport-connected, established suburbs, may remain structurally undersupplied for years. And over the next decade, performance will be driven less by Ipswich versus Brisbane and far more by which suburbs can and cannot absorb that growth. That's why understanding the city plan, zoning changes, density allowances, and infrastructure sequencing is no longer optional. And that's why you need to be surgical in your suburb and asset selection. Please don't trust buyer's agents who talk about data. Make them show you the data, both raw and interpreted, and explain how it drives their recommendations and why. And if you want help navigating any of this, that's exactly what we do. You can give us a call anytime or jump online and book a free discovery chat with Boyd and myself, because we'd love to walk you through what we know. Until next time, happy property navigating.